Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, in the week gone by, we did see that the Nifty shed about 120 points or 0.5% in trade, while the Sensex tumbled 723 points or 1% in trade. PSU banks, meanwhile, outshined with the State Bank of India really leading with about a 12% rally in just about 5 trading sessions as well. The market has been consolidating and investors have also been witnessing a bit of volatility. Now, will the trend continue this week as well, which will be important to track the macro data too? We will tell you all of it, but first up the top headlines this hour. Indian stocks are likely to remain in a sideways consolidating band on Monday as flat overseas cues had topped out. Valuations prevent bulls from advancing further. Coal India, HAL and Mazagon Docks earnings eyed. Broader cash markets are undergoing a bout of profit booking as several earnings, especially from the hyped-up PSU pack, fall below expectations. Fresh longs are advised high caution. Very good morning to all our viewers and good morning to you, Shail, as well. Well, just as I was pointing out, it's been volatility and consolidation as part of the game all through last week when we saw the big event of the RBI policy unfold. As we shift focus, of course, earnings are going to be back in focus and, of course, macro data from inflationary data from across the world, including India, will be important to track, as well as IIP this week as well. Shail, would caution prevail in the market right ahead of the release of the Indian inflation and IIP data this week?
A very good morning to you, Sakshi, and a warm welcome to thousands of viewers who are now joining us every day on Market Today for possibly the best intraday live coverage on stocks. I would imagine, Sakshi, you know, it's like you remember those old Ajit jokes? Isko liquid oxygen mein dal do. So there's something like that's happening to Nifty, you know. As you mentioned, flat, sideways, nothing is happening. Liquid इसे जीने नहीं देगा और ऑक्सीजन इसे मरने नहीं देगी. So in our case, liquid is liquidity, which is trying to boost the market higher, and oxygen is third quarter earnings, which in many cases have the expectations were so high that even the best set of earnings is resulting in profit booking, and that's normally the case as far as markets are concerned. You mentioned SBI. That's the lone bright spot on the Nifty last week, up about 13%. We have SBI chart for our viewers. I think let's take a look at that as well after we show the Nifty daily chart. So this sideways trend, Sakshi, is the one that's really worrying, and beyond 21,200, beyond 22,100. My apologies, please. Beyond 22,100, the Nifty just lacks the firepower to go up. So 21,900, 700, 800 is what is the trading zone. And if you look at how individual stocks are behaving, apart from State Bank of India, Reliance Industries, and to some extent, TCS, nothing much is clicking in the charts. Sakshi, on the long side, we've seen the kind of pain that Axis, ICICI, HDFC Bank, Kotak are undergoing. No momentum coming in there. Probably TCS is a bright spark, but look at how ITC has disappointed investors on the long side. So even Stevens, if you look at it from that point of view, on balance, I think this Nifty is in a consolidating sideways zone. Nothing much is coming out of it. Individual rallies are of course gathering our attention, and therefore we look at Reliance, we look at TCS, we look at State Bank of India. They're doing phenomenally well. And Sakshi, what's really troubling for me is that if you look at the weekly charts of the Nifty mid cap index and the small cap index, I think they've hit a bit of a saturation, and that's the pain point. I think that blue chips haven't been able to take the Nifty higher beyond 22,200, and it's the mid caps and the small caps which have been bearing the entire load of taking the market higher, and they seem to have now hit some kind of a, how should I say, pause mode. The weekly chart of the Nifty mid cap 100 and the small cap 100, unfortunately we are not showing it to you, but they now point to कि भाई बहुत हो गया, 13-14 हफ्ते से हम लोग दौड़े जा रहे हैं, it is time to rest. So this is something as far as the broader markets are concerned. And on Thursday and Friday you saw a very strong bout of profit booking happening in the entire PSU pack. Remember, this has been the role model, the racehorse, the stallion that has been running the market higher, and
Absolutely.
that has paused, and rightly so, because valuations are overstretched, charts are overstretched, earnings, no matter how good, and some of them are actually bad, have now resulted in a pause mode. Look at GMDC, look at how earnings from some of the other companies have come in from the PSU banking pack, and a profit booking round is due at that end as well. Now what is to look forward to as far as Nifty is concerned today? Earnings. Coal India comes up with its numbers today. Apart from that, within the defense pack you have Hindustan Aeronautics and Mazgaon Docks. Apart from that, within the F&O space you have Bharat Forge, you have Steel Authority of India, and you have NHPC. So these are the earnings that I'm looking forward to. And within the IPO space, you have APJ Surendra Park Hotels getting ready to list today. The IPO was at about 155 rupees. Fairly decent kind of a response. Let's see how it does, Sakshi.
Absolutely. We will keep an eye out on all of these stocks which are earnings bound as well as new listings. But as far as the bank Nifty is also concerned, Shail, I wanted to ask, because on Friday we did see an increased participation from the private sector banks, which have rather been, in the back row of, up until so far when the rally was unfolding. Is it now time to shift focus from the outperformers to the underperforming private sector banking index?
Sakshi, how I wish this were true, that we start focusing on the likes of Kotak, the likes of ICICI, Axis, so on and so forth. But you see, I generally look at only three things in life, which is price, volume and delivery. And there is no let up in the PSU pack. Just look at how wonderfully well State Bank of India performed all of last week. And this was about a 12.5% rise in prices on a weekly basis, and very strong chart patterns coming in. Look at how Bank of Baroda is now at a record high. Look at how Canara Bank is outperforming. So my suggestion is go with where the money is moving and in the direction at which the money is moving. Of course, there will be how should I say, pit stops in the form of a correction. Remember, Bank of Baroda moved from 225 back to 180 because of that news coming in about problems in their lending space, problems in their uploading of customers, problem in their software. Well, where is that problem now? Of course it exists, but the chart is saying something else. 260, 267 right there in front of you. Canara Bank, Feb 26th is the day when they decide on the ratio of the split. The counters up 10% all of last week. You see a price of 573. This was last seen 10 years ago, if not earlier. Look at State Bank of India. This price has never been seen.
Yeah.
And the quarterly earnings were terrible. There was a pension, how should I say, provision. There was a provision for higher wage revisions, so on and so forth. And the company and the bank said, okay, this is something that's going to continue for 3-4 quarters. But look at what the stock is doing, 727. So background noise is good, but the ultimate reality in market is just three things: price, volume and delivery. And that is moving only in the case of PSU banks, this time larger banks, Sakshi.
Okay. Anything in the F&O space, Shail, that you'll be watching out for, any particular stocks?
Okay, you want me to start with the positive or the negative?
Positive.
Positive. Chaliye. Then we'll start with the alphabet A, which is Aurobindo Pharma. I just like the PCR to draw the daily chart of Aurobindo Pharma. It's being showing a 5-day fall when it comes to all of last week. The stock corrected from an all-time high, which was somewhere like 1179 rupees, and went all the way down to below 1000, somewhere like 973. And this is the lowest that we've seen since 16th of November, Sakshi. Now the good part. Look at the earnings. They've just blown out. Aurobindo Pharma has reported a number of a 91% rise in third quarter earnings to 936 crores, and revenues up by about 14% to 7,350 crores. And across the board, multiple businesses have reported strong earnings. So this is Aurobindo Pharma for you. I see a fairly decent uptick on there, and there is disappointment in the form of ONGC. There is disappointment because the stock has run up very, very substantially, but even though the profit is 9,350, it is down 13.4% from the year ago period, and you have oil realizations falling to 6.4% year on year at $81.6 a barrel. That's because oil has been quiet for the last 3 odd months, and this is something that we need to look at. ONGC simply because the run up has been very, very sharp. So this kind of a disappointment just might induce a bout of profit booking. Let me give you a very, very interesting statistic on oil and ONGC. The 1 month performance, when you look at the stock, despite Friday's strong profit booking, is 13%, which is in the month of February F&O expiry, the counter is still up 13%, and that is something which just might incur a round of profit booking. So Sakshi, these two, and of course the whole pack of PSUs, some of them are in the F&O band, some of them have moved out. So those are the ones that are on my radar.
Sure. Let's also look at how the global market cues are shaping up. So the S&P 500 from the US markets closed above 5,000 mark for the very first time on Friday. The Nasdaq briefly traded above 16,000 as well, with boosts coming in from the mega caps and the chip stocks, including Nvidia, as investors bet on the artificial intelligence stocks as well. We also saw that the Dow Jones was inched up higher as far as Friday's closing is concerned. Just about flattish at this point in time for the Dow Jones, but the Nasdaq and 500 S&P index were definitely up in trade. Asian markets opened mixed today, to start a holiday shortened week for most of the markets, while the China markets will be shut for the week entirely. We did see many of the stock markets were closed on Monday as well, are closed on Monday as well. So Hong Kong, Taiwan, South Korea, they're shut. However, when we talk about Japan's Nikkei, that opened a bit higher, 0.1 to 0.18% higher in trade, and the Kospi also traded about 0.5% higher in trade as well. So the trends in the GIFT Nifty indicating a strong start for the Indian markets, about 100 points uptick or a 0.5% uptick can be seen. But the question will be how far and how much will this extend as far as the gaining action is concerned. Foreign investors were net buyers to the tune of 142 odd crore rupees in the cash market on Friday, while domestic investors were heavy sellers of 21 odd crore rupees, even though they had been buying in the previous few trading sessions as well. Let's now welcome our guest on the show. Mr. A.K. Prabhakar is with us. He's the head of research at IDBI Capital. Mr. Prabhakar, very good morning to you. Good to have you with us. We were just discussing amongst us as to how the markets are increasingly turning more consolidative and more volatile at this point in time, with the profit booking really taking place in a lot of pockets that were outperforming so far. So the PSU stocks, they are looking at some profits being taken off the table at this point in time. How do you sense the markets moving forward, especially now that the big bang events are behind us?
Good morning. See, I was looking at few stocks in PSU Bank. There is a huge gap there. Now, I'll give you few examples. IOB, it trades at 7 times price to book. It trades at a PE ratio of more than 54%, 54 times. And you have State Bank of India, which trades at 1.6 times price to book. And, it is the largest bank. I cannot understand. Now, and in IOB, the free float is just 2% where public is holding. Now, and now because whether we are buying based on price or based on valuation, I fail to understand. I have been there for 33 years, but this is something I'm bit worried about, because retail might be buying. I'm saying might be, now might be buying based on price, not based on valuation. You have Bank of Baroda, which is cheaper, UCO Bank, which is expensive. You have NBCC, which is very expensive. You have other same infra stock, which is trading at 20 times. No, L&T trading at 35 times. No, and many people do not understand the business difference between the business model itself. So I fail to understand. So I am a bit cautious on market. I would like to buy selective stock, but with a SIP model, because if market corrects due to some reason of expensive valuation, then I'm the stock which I select also can correct. So with that caveat, I think we are in a market where there are a lot of excess valuation. One company came with a result. I think it is Vedant Fashion. Now we saw a correction of 40% almost from the highest level. So that is the valuation we pay. No, it is too high. There are many high PE stocks which are correcting. So one has to be very careful, because many times to get back to that price, it will take 2-3 years. Now, and investors might lose money. So I with a caution, I will say there are pockets of good valuation. Now there are banks which are still lowly valued. I'll give an example of Federal Bank, where they make a profit of almost 3,900 crores, and their market cap is just 35,000 crore, and the price to book also, it is very attractive. We have a target of 200. So there are value pockets of value attraction. But when market starts to correct, or few pockets starts to correct, the stock where we like, or maybe the valuation gap is there, that also might correct. So you cannot go and buy all out there. You have to be very systematic in your buying, then you can sustain in this market. But there is a huge difference in what we perceive and what market likes.
Absolutely. A very good morning to you, Mr. Prabhakar, and that is the reason why market today makes it a point to get a very, very sensible stock pickers.
I'm not able to
such as you on
hear
a very
what
regular
Mr.
basis.
Shail says.
Okay. Am I audible to you now, Mr. Prabhakar? A very good morning to you.
You are audible, yes. No, I would like to hear you.
Okay. Yes. So the reason, Mr. Prabhakar, we invite very sensible people such as you on market today is to provide the background context of why stocks are rising and why they might just correct very sharply. If you hear Sakshi's headlines today, she mentioned very, very clearly that one needs to be extremely, extremely cautious when dealing with momentum, especially in cash stocks and especially in PSUs. And you rightly point out the very odious comparison between Indian Overseas Bank and of course State Bank of India. Point taken on Federal Bank as well, sir. Where else do you find value in this corrective phase in the market, which just might help investors over the next 6 months to 1 year, 2 year? What looks good to you?
The result season has not panned out as well as I would liked it. because there are a lot of disappointment. But if you are a 3 to 5 year investor, then there are pockets of value. I think Karnataka Bank with a new management, there are things changing. It is a 8,000 crore market cap. They have generated trailing 12 months basis profit after tax is 1,300. It is trading attractive, but I will not say it is very attractive. But if you are looking at 3 to 5 years, then Karnataka Bank, even DCB Bank, now can be pockets of thing for a long-term investor. But in short term, due to what is happening in the market, see, we need to understand in banking, collecting deposit has become very difficult. There is a huge gap. The cost of funds has
Yes.
gone up, which is impacting whole banking sector. But South Bank based bank are better placed because they can generate better deposit. So that is why I'm giving Karnataka Bank and Federal Bank. And few larger PSU banks are also better placed, so they can generate the deposit. No, but their cost of funds will increase, so there will be a NIM compression. So we need to have that now as a caveat and then invest. So it is not for somebody looking at 1 years. It should be for 3 years to 5 years. Otherwise, we will have some pain in between.
Okay. Mr. Prabhakar, I wanted to understand from you, what would you really do with the PSU stocks now that have been on a huge run up that we've seen all across, be it metals, mining, be it defense, be it railways. There have been so many pockets that have actually had a huge run. Would you say that all of those who got the better of this run up to now book profits and sit on the sidelines because the best is behind us in the PSU rally? Or would you say that still there is enough and more stocks that can be bought even at current levels?
Market can be crazier than we can expect. So I cannot say book profit. No, it is very difficult. But if you ask me whether I would like to put my money now, no, I will not, because everything has become very expensive. Previously, we liked NMDC. If you recollect, about 2 months back, we talked about NMDC. So everywhere, the stocks have rallied. So the risk to reward is not favorable. Now, if I invest, the chances of at current level, I might lose 10-20%. It is better I wait and buy. Now, in market, there is always an opportunity when you hold on to cash. So now PSU at this point of time, I'll be very selective. Now I'll be a SIP investor rather than putting my money straight away. Yeah, a few PSU banks are attractive, like State Bank of India, Bank of Baroda, or Union Bank. But PSU space, I will wait. Because metal is a cyclic industry where if you put your money and if you are in the wrong cycle, then again it takes very long time to make money. So I'm a bit cautious on PSU bank, but there are selective opportunities there in PSU banks, but other places I would wait.
Okay. What we'll do, viewers, is we'll take a very short break. When we return, we will open up with the pre-opening trades as well as more stock ideas and discussion on the strategies with Mr. Prabhakar. So stay with us, viewers.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation, and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, Managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-risking the Future in collaboration with Business Today.
Welcome back on Market Today. We are just seconds away from what is going to be a nice pre-opening as far as Monday is concerned. Remember, index heavyweights such as Coal India are going to report their earnings. The overall theme as far as mid-cap, small-cap and the Nifty are concerned is that they are in a sideways consolidating band. We've seen enough run-ups. Let us see how the market opens when it comes to prices today. We'll be looking out for ONGC and Aurobindo Pharma based on earnings. Okay, we have a 65-point uptick on the Nifty, 21,884 in initial trades. Let's look at stocks that are performing fairly strongly. Okay, I'm interested in State Bank of India. It's opening 1.3% higher, 734. There is strength in ICICI Bank. Remember, Friday afternoon, a lot of private sector banks such as ICICI, Kotak, in particular Axis, showed a very strong long build up in the last half an hour of trade. So ICICI at about 1025 is up about 7.4 rupees. Let's look at Axis, what it's doing, 1061, about 1% higher. Tata Motors, no let up, 930, fresh high, 15 rupees higher. Bajaj Twins, Bajaj Finance and Bajaj Finserv ahead of the weekly expiry, which is tomorrow, of the Fin Nifty. Both stocks are doing pretty okay, 0.5% higher each. How about Reliance? Flat, 29. And how about HDFC Bank? Nothing happening there, 1403. How about Infosys? Infosys is again flat at 1669. The Nifty is now gaining a bit of momentum, 74 points higher, 21,854. Private sector banks plus SBI helping the index out. Let's look at the top gainers in the F&O space. No surprise, Aurobindo Pharma, 7.5% higher, 1078. PI Industries, 9% higher, 3795. What else is clicking well? Okay, in the most active counters, nothing much of significance. I'm surprised to see Ambuja Cement here, 5% higher, 604.90. This is a fresh high. We have tire stocks, Apollo Tires 529.50, 3% higher. MRF 2% higher, we'll ignore that. This is how the F&O is moving. How about NSE 500? Okay, there is a pain on SGVN, ladies and gentlemen.
Yeah.
It's 14% lower at 120. Remember, this is the PSU pack that I'm talking about. A very sharp rise, overstretched charts, overstretched technicals, and earnings that have disappointed, and you see a very sharp downtick. What are the top gainers in the NSE 500? We've mentioned both Oro and Naveen Finance, Naveen Fluorine. You have, I just want to look at sensible low priced counters. All of them are 4 or 5 digits. I don't see anything interesting, Sakshi. What have you observed? Nifty is 55 points higher, 21,838, and we are waiting for Mr. Amar Singh, Senior Vice President Research at Angel One, to join us. Sakshi.
Absolutely. I think Apollo hospitals will be also important to track post the earnings. Of course, some of these pharma majors like Sun Pharma will be important to track as well. Apart from this, Tata Power, that's one stock that's reported softish numbers. So that is one stock that I'm looking at. Of course, this is again one stock which has been most talked about in the power space and the power story that has unfolded. So Sun Pharma opening just about 0.9% higher. Tata Power is about 1% lower. Bandhan Bank, that's the one that I'm looking at. post the earnings, the profit has really more than doubled in Q3 as well for the company. So that's another stock that I will be watching out for. Bandhan Bank about 2% higher in trade at 220 odd levels is what it is opening at. So these are some of the stocks. ONGC, of course, that's the one that I'm looking at here. The profit came in 36 odd crore rupees. That was down about 13.5 odd percent. So that's the one that I'm looking at as well. Revenues, dropped about 10 odd percent as well. So we're looking at a 1.3% downtick coming in as well. So we do have Amar Singh now joining us. He's the Senior Vice President Research at Angel One. Amar, very good morning to you. Good to have you with us. Tell us, what do you sense as far as the pre-opening trades are concerned and the markets are concerned, the strategy here and your two stock ideas?
Yeah, very good morning, and thank you for having me on the show. So what we've been witnessing in I would say, indices primarily, we've seen some sort of consolidation happening there. And we are seeing that overall, if I look at first talking about Nifty, some of the heavyweights have been, I would say, doing quite well in terms of IT, in terms of Infosys, TCS, Reliance. But the private sector banks and SBI, but the private sector banks, primarily HDFC and ICICI Bank, they've not really been performing, and HDFC has been the major one that has dragged the market. So looking at Nifty, I would say still the intermediate term trend, the long term trend continues to remain strong and positive for Nifty. There's no doubt about it, or I would say for the benchmark indices. But from a short term perspective, we are seeing some consolidation. So again, it's only on any correction that's a buying opportunity. Higher levels would be sold into, or profit booking is witnessed. The derivatives data also supplement the same. So looking at Nifty, I would say any pullback towards 21,650, 700, that's a very strong support zone. So there we could witness some bounce back. The moment Nifty approaches towards 21,850, 900, that's a level where we'll witness some sort of selling pressure. So because the short-term charts clearly points towards consolidation and a lack of trend from a short-term perspective. That's the reason we are seeing this sort of movement. And also, I would say it's been some of the global factors which have been supportive, which have really helped the markets. But primarily, it has been HDFC Bank, which has really pulled the stock down, pulled the index down. Looking at Bank Nifty again, Bank Nifty's got very strong support coming around the 45,200 levels or so from a short-term perspective, whereas upside seems to be capped around 46,400, 500. Now, coming to specific stocks, one stock I definitely like is East India Hotels. This stock has moved up significantly. It's gained, I would say, if you look on a week-on-week basis, it's gained a significant, I would say, significantly. So this is one stock. Any pullback, currently it's around 407 levels. Any pullback towards 380, 385, that's a good buying opportunity because the trend continues to remain strong. It has the potential to rally towards 450, 460 levels on the upside. So that's one stock I would like to talk about.
Namaste, Amarji. What a wonderful explanation as far as Nifty is concerned. Yes, it lacks the strength to sort of take out 22,200 simply because there isn't much momentum on the long side. How would you rate SBI? Earnings that sort of kept the market unhappy, but the stock has run up 13% to a fresh high on the markets all of last week. Any views on State Bank of India?
Yeah, I would say that there's a very interesting perspective. Like if you look at earlier, it was the private sector banks which were outperforming the public sector banks. Now it's a complete reversal. Because if you look at Nifty for this 2024, these 2 months, Nifty is marginally up by, I would say, 0.24%, whereas Bank Nifty is down by 5.5%. And there also what we are seeing is that it's primarily SBI which has performed in the large cap banks or heavyweight in terms of banks in the I would say banking space, whereas the private sector banks have really not performed. Now coming to SBI, SBI is one stock which continues to remain extremely strong on the chart. So it's a clear buy, meaning if I look at HDFC would be consolidating around 1370, 1400. That's a very strong zone. So 1400, 1700, that's a zone because the long-term charts are not at all, I would say, encouraging for HDFC Bank. But State Bank is a different story altogether. We've been long on State Bank for quite some time, and we continue to remain bullish on SBI. So this is one stock one can definitely look at. But currently it's trading around 726 levels. So ideally one should wait for some correction. Upside target would be around 770, 780 levels. But on any dips or correction, this is one stock one can definitely look at holding in one's portfolio.
Okay, SBI, definitely it's coming on top of the radar of most of the analysts right from about 10 days ago when the first call on SBI came in on our channel. From that time, a series of positive commentary is what you have seen. And again, 726 is what you see on SBI currently as well. You know, the markets are settling in the pre-open trade. So Dr. Reddy's among the top movers, 1.2% high. UPL is moving up. Hero Moto after the earnings is moving up, 0.8%. JSW Steel. You have Eicher Motors, Tech Mahindra, HCL Tech. So these are the kind of stocks that are moving up. It's the PSU banks again that look positive, about 0.5% high in trade. And of course, the metals and the healthcare pack. These are the three pockets that look to be promising in trade today. Of course, from the PSU basket, you do have stocks like LIC coming back in flavor. So we will continue to track that as well in trade as of now too. Shail, anything else that you've caught in the pre-opening settling?
Yes, actually, I think we need to look at what's high beta stocks doing. There is again, like I said, a bit of a pain which is coursing through the entire setup. Inox Green at 120 rupees is 5% lower. There is a 4.5-5% cut on Megasoft, where earnings were disappointing. 66 rupees you have. Let's look at the PSU pack, where you see a fairly strong bout of profit booking. 5% lower on IFCI, 5% lower on IREDA, 170.65. Every day we used to wonder why is it going 5% higher. Well, the tide has now turned. Midhani is 5% lower at about 438. GMDC is 4% lower at 412. So this is how the heaviest you see the traded space is ticking on the red side. I'd also like to mark Ease My Trip. It is 53 rupees 20 paisa, 4.5% higher. This is the top gainer in the NSE 500. And guess what? The company has just made an announcement that they will be setting up a 100 crore rupee 5-star hotel at Ayodhya. Now this is just an announcement. I think the project will take at least 5 years to come up, but such is the enthusiasm for low ticket, high beta stocks that the counter is now up 2 rupees 10 paisa. That's how it is. Aurobindo Pharma, Sakshi, 3% higher. Let's get Mr. Prabhakar's view on this one. Earnings were fantastic, Mr. Prabhakar, 90% higher at about 976 crores. Would you have a view on Aurobindo Pharma, sir?
So pharma is a sector we don't track, so I won't be able to comment on pharma stocks.
Right. Amarji, any view on Aurobindo Pharma, sir?
Yeah, so if I look at Aurobindo Pharma, see, if you look at Aurobindo Pharma, it's been one stock which witnessed a significant rally, and currently we are witnessing some sort of correction, and it is very close to its crucial support zones. So on the downside, I would say that somewhere around 950 and 1000, that's a very strong support zone. And also if we go back on the long-term charts, that tells me that, or I would say intermediate term trend, that tells me now at least the rally for Aurobindo Pharma is over in the short term. There's no doubt about it. So it's going to now consolidate between 900 and 1200. That's the range. There's no significant rally happening in the stock in a hurry. It would consolidate. That's what I'm seeing on the charts.
Okay. Staying with the pharma pack, how would you really look at Sun Pharma shares, Amar, and could you share with us your views on Sun Pharma? Of course, the stock has been in an uptrend. If we look at the kind of 1 month move we have seen on Sun Pharma, it's been a sharp 16% up move. Of course, in the last 6 months odd, it's moved up 36 odd percent as well. And we've seen that after a long haul, the stock has been continuously moving higher. Last 1 year returns are upwards of 51 52 odd percent as well. Do you think time is now, ripe that for all those investors who've been staying away from the pharma pack can also start building up their positions in Sun Pharma?
See, looking at Sun Pharma, the stock has witnessed a significant rally. And if we go back in time and see, so it's somewhere around November, second week, it was trading between 1100, 1200 levels. Currently, it's around 1540 odd levels. However, the long-term trend, intermediate-term trend, that continues to remain very strong, and the short-term trend continues to be very strong. But some of the short-term indicators do point towards overheated, I would say, in the stock. So the risk-reward ratio might not warrant entry at the current level, because trying to get into a stock which has significantly rallied, you don't really know where your stops have to be in case there is a trend reversal. So I wouldn't recommend, though it is a long-term very strong on the charts, even the intermediate-term trend continues to be very strong. But some of the short-term parameters, they indicate that it's in overheated territory. So on any significant correction, one can look at buying the stock, but not at the current levels. I wouldn't recommend.
Okay, we are at 9:14, ladies and gentlemen, just seconds away from the first pre-opening pricing on Monday. And we are looking out for stocks such as Aurobindo Pharma on strong quarterly earnings, and ONGC as far as disappointment is concerned. Let's look at ONGC for a moment. The stock has opened about 1% lower, 264. Okay. Onwards and upwards as far as Nifty is concerned, 28 points higher, 21,800. The Nifty Bank is flat, doing nothing at 45,650. The IT index has opened 1/3% higher at 37,828, 124 points higher. Okay, let's look at the contributions. I want to see what Reliance is doing. It's down 6 rupees, 29.15. We are looking at heavyweights first. HDFC Bank flat 1404. What's Infosys doing? Infosys is 13 rupees higher at 1682. So one stock out of 3 index heavyweights is in the green, which is not a good sign. Okay, now what else is booking profit? SBI 4.5 rupees lower, 72.50. There is no complaint here because the counter rallied 13% all of last week. ICICI Bank flat at 1008. Axis absolutely flat at 1050. There isn't much that is happening on the Nifty. Let's shift focus to FNO and look at what the top gainers are doing. Aurobindo Pharma, Dr. Reddy's, driven by earnings, 1029 on Aurobindo Pharma, 2.5% higher. Dr. Reddy's 6260, 1.7% higher. Z is now 2% higher, 206.70. Vedant 279.15, 1.75% higher. What are the most active counters in terms of volume? Tata Power, how interesting, 3.5% lower, 377 profit booking, and fairly strong volumes coming in. Hero Motors 3% lower, 47.44. The Nifty slipped in the red, 15 points lower for you at 21,765. A very, very quick view on what's happening on NSE 500 in terms of top gainers. Sakshi, we have Ease My Trip, 3.7% higher, 52.90, driven by news. Birla Corporation, this is a stock to look at, 3% higher, 17.46. LG Equipment, 691, 1.7% higher. LIC, 2% higher, 11.05. This is what I see. Let's get Amar into the conversation. Amar, anything that catches your fancy in the initial 1 or 2 minutes of trade, something on the outperforming side, on the long side?
I would say if I look at in the pharma space, Divi's Lab, I would say, has corrected, and we've seen some sort of consolidation happening here. So this is one stock which seems to be now witnessing some pullback. But the stock, if it sustains above the 37.50 mark, then we could see some sharp rally in the stock towards 38.40, 38.50, because it seems to have formed a very strong base. So this is one stock one can look at from a short-term perspective.
Okay. Right. Let's also look at Paytm. That's opening with some green ticks again after the volatile moves that we had seen in the last week as well. It's opening about 1% higher in trade. Mr. Prabhakar, how would you really look at Paytm now? 2% higher. Do you track this stock? And after the developments, how would your positions be?
Yeah, no, I track it for no my understanding. So no, people ask me, can I buy Paytm after it has corrected so much?
Yeah.
I tell them that even if it is 10 paisa, if I have to pay only 10 paisa for the whole business, which is now I think 27 or 26,000 crore market cap, I would not do it, even if they give the business to me at full business at 1 rupee, because the yearly loss is almost 1,700 crores. And after what RBI has done, I think it will increase to 3,000 crores. So from my pocket, I have to pay 3,000 crore, no, getting the business free. So, no, as a retail investor, I will stay away. No, so if somebody understands the business, if he can turn around, it is okay. But buying this business for me is very difficult. And you take the record for last 7 8 years, which is available. They have been consistently making losses. Now there is now a overhang. So I would not buy this business even if it is given free. No, I will not buy it at 428. So we need to understand whether we can understand the business. For me, understanding business has been very difficult in the new age. So I've always given a pass. Many people think, no, I don't understand. It is better I don't understand because I cannot lose money. Now I'm here to make money. If do not understand business, I need to stay away. I need to give a pass. Every business, there are more than 6,000 companies listed. There are many business which I will not be understanding. So it is better to give a pass rather than to buy based on price. One point of time it was 2,000. Today, because it has come to 400 or 430, it doesn't mean that it has become attractive. Till it doesn't turn around, it doesn't show me a path to profit, I will not buy the business.
Okay, give it a pass on Paytm even if they are looking like attractive levels as of now. Let's look at a whole host of PSU banks that are moving up in trade. PNB over 1% higher, 125 odd levels. Bank of Baroda, we briefly mentioned 1.5% higher in trade. Bank of percent up. Indian Bank, that's up by 0.8% odd or so at this point in time. You also have Indian Overseas Bank, Canara Bank, that are all moving up in trade right now. What would you say, Amar, on the PSU banks as of now? Any particular banks that you think are now looking positive?
I would say amongst the PSU banks, we've seen some significant rally across the board. Because if I look at the PSU banks, we are starting from SBI and all other banks, we are seeing some very sharp move and very sharp returns happening there. So I would not recommend, at least at the current levels, because we are seeing some sort of, I would say, profit booking also happening in stocks like Bank of India, or we are seeing some sort of profit booking happening in Bank of Maharashtra, and we are seeing Canara Bank also some sort of consolidation. So now what we are witnessing, and if I look at central bank, there also we are seeing some sort of consolidation, and Indian Bank also. So I wouldn't recommend buying at the current levels because they have run up too far too fast. So rather wait for some consolidation and then enter. And so I wouldn't recommend at the current levels fresh entry.
Okay, no issues at all. Let's look at where money is moving in. Aarti Industries for you, 692. The counter, I think, has moved 4% at a very rapid pace. And yes, 688.60. And the last 3-4 days have seen very hectic activity when it comes to price. This is something that needs to be checked with Mr. Prabhakar. Mr. Prabhakar, Aarti Industries is one of those stocks that a lot of sensible people have in their portfolios. Is this something that interests you on the long side?
Yeah, see, the chemical industry has been in a pain for a very long time, and still they are just now coming out of it. Maybe another 1-2 quarters, but for somebody who is looking at 2 to 3 years, I think chemical as an industry, one can slowly start to accumulate. So we have coverage on AMI Organic, Clean Science, and SR. We feel over a period of time these stocks will give returns. So you need to do a SIP now at this kind of market, but there is enough value left on the table in these stocks.
Fair point.
Right.
And Sakshi, I just like to also mark Geofinance. The reason why I am pointing this out is that it's up 2.3, 2.4% at 279, and it's the volume buzz that's coming in on Geofinance. So far, we've got about 178 crores in terms of transactions. This is something to watch at. And surprise, surprise, look at how the market is now reacting to earnings. I'm looking at, Sakshi, the top traded counters on NSE. SGVN is 9% lower.
Yeah.
It's the top traded stock, 244 crores. NHPC is 4% lower, 237 crores. Yes Bank is 1.5% lower at 215 crores, and Tata Power is 3% lower, 197 crores worth of transactions. The first four stocks on the top traded list are in the negative, of which two of them are public sector units. So this is how sharply profit booking comes in when you have a mild disappointment on earnings. Even IRFC is down 4% at about 148 rupees, 157 crores worth of transactions. Sakshi.
Absolutely. A whole host of these PSU stocks are correcting at this point in time as well. IREDA as well, that's also down in trade. Of course, we've been looking at a stellar rally upwards after the listing, but now it's on the way down again. Another 5% downtick coming in at 170. This is after the stock price crossed 200 levels as well. Mr. Prabhakar, would you have a view on IREDA at this point in time?
No, I will not be able to talk on the stock. IRFC, is something where Shail has been mentioning. So at one point of time, the market cap was 2,50,000 crore. Today it is below 2 lakh crore. No, yesterday when I was seeing, it was 2 lakh crore. For a 2 lakh crore market cap, they make a profit of 6,000 crores. So it is very expensive, price to book basis, or on the P ratio basis. It is very expensive. So, and their NIM is only 1.33 compared to your bank, where they are in the range of 3 to 4%. So, low NIMs. Yeah, you can say they will not have a gross NPA or NPAs, but the growth is not likely to come from here on. So I think it was trading very expensive. It has already corrected almost 20-25%, but still no, the valuation is not cheap for somebody to enter. So one has to be cautious there. So now most of the stocks where the valuation were expensive, it has started to give away, and this is where one has to be very careful. There are pockets of value also. We Moltech packaging came with a result. No, not a great result, but when you look at the long-term growth, we feel there is a long-term growth. We have a buy on that. So there are pockets where value can emerge. There are pockets where it can correct deeply. So we need to differentiate and invest as
Sure.
an investor.
Absolutely. The entire healthcare space is looking at sharp moves. Of course, Divis Laboratories also discussed with Amar a little while before. So 3.5% higher. That's now as a top mover. Dr. Reddy's is moving up. It's got an EIR from US FDA. That's the trigger point. It's now 2% higher in trade as well. We discussed Sun Pharma as well. That stock is moving up higher too. And the entire basket is up. So it's Zydus Life Sciences 3% up. Oro Pharma was mentioned by Shail and discussed with the guests as well. It's up 3% higher. Laurus Labs is up in trade. Max Healthcare, Granules, the entire pack. It's a sectoral move that you're looking at in the pharma space. And the other space is also the IT pack. So you have HCL Tech, Wipro, Tech Mahindra, Infosys, all four of them really moving up in trade as well. Defensives coming back. This was also something that we had marked out on Friday as well. Amar, your view You did mention Divis Laboratories. You discussed about Oro and Sun Pharma as well. Any of the hospital stocks that come to your radar in this kind of an entire sectoral move that we are looking at in the pharma space?
So if I look at the hospital stocks, so Apollo Hospital is one which has, I would say, witnessed a significant rally. But again, at the current levels, there seems to be some profit booking setting in the stock. So not at the current levels, but any significant correction, this is one stock one can definitely look at from the hospital space. The other stock, again, Narayana Hrudayalaya, I would say, again, very strong on the charts, but again, it's not at the current level. So these are good stocks to hold, but not at the current levels. On any significant correction, only we should look at them.
Okay, Sakshi, let's look at the broader markets now. We are at 9:30, and it's not looking good for the bulls. Why I mentioned this is the advanced decline ratio is actually 1:1. 1030 shares in the green, 1060 in the red. What's paining? It's the realty small cap and the banking pack, which is in the red. So out of the 19 indices that we track for you, only 4 plus 3, 7 are in the green, which essentially means that the broader market is slipping towards the red. What's NSE 500 doing? That is the clue. 19,995, marginally in the red, and advanced decline ratio is also 250s to 250. So nothing much happening there. Actually, Sakshi, what's looking good is pharma. What's looking good is also cement. Look at how ACC is moving. Look at how move is coming into JK Cement. These may be just 1% higher, but the entire pack is doing pretty well. So JK Cement is 1% higher in the F&O space, 42.80. Grasim is at 21.90, 0.6% higher. Let's take Mr. Prabhakar's view on the cement pack. Mr. Prabhakar, not much of overvaluation or enthusiasm or outright run-ups on cement counters. Is this a sector that catches your fancy in terms of good picks in the mid-cap space? A view on maybe Birla Corp?
Yeah, I think cement is there is value, and we need to understand once the election is over, the order infra push will be very high. So we like Ultratech, ACC, Ambuja, and a few other spaces also in cement. So we are positive on cement, but it is a bit longer term view. At this point of time, cement stocks are very soft, and it will continue till the elections is there. And I will share one more data. There are about 64 countries which are going for election in the year 2024, and US is one thing which will have an impact. So when we select stock, we need to take cognizance of that data also.
Okay. Right. So that's as far as the cement pack is also concerned as of now. Amar, do you have any pick from the cement basket on technicals or charts? Is any stock really looking promising at this stage?
Yeah, I would say looking at the cement basket, ACC is definitely very strong technically on the charts. But ACC, if we go back and look at it, so in September of 2022, it had made a high of 2785, and it is approaching that level. So that's a level to watch out for. 27, I would say 2750, 2800. That's a very strong. It's currently almost 100 points lower from that level. So that's a level where the stock would meet with some sort of selling pressure, selling resistance. If that is taken out, then we could witness a real sharp rally in the stock if it consistently breaches that level. Otherwise, I would say most of the cement stocks are now displaying some sort of consolidation or profit booking. This is ACC is one stock which is now very strong technically, even on the long-term charts. But as I said, the levels to watch out for is 2750, 2800. That's a earlier highs. So that would be where we could witness profit booking in the stock.
Okay. I'll also mark KCP. That's moving up very, very sharply. I think 9.5% move on this one as well. Amar, do you track this stock as well from the space? And do you think there is momentum to be tapped here? Now it's 10% high and trade at day's high, 221 odd levels.
See, if you look at KCP, what we've been witnessing for the last almost since I would say January, that the stock moved up towards 195, and then there was consolidation. And only last, I would say Friday and today, we have seen some very sharp move in the stock from 175 levels to currently around 220 levels. So, and Friday was also on significantly high volumes and quantity. So if you look at the charts definitely point towards strong, I would say, momentum, bullish momentum, be the short-term, intermediate term trend. But I would say wouldn't recommend buying at the current levels. It has got now very strong support. So earlier 200 was acting as a zone of resistance. So if anyone wishes to go long, the stock needs to be below the 200 mark. Whereas on the upside, since the stock has broken out of major resistance zone, it has a potential to rally towards the 248, 250 levels.
Okay. Sakshi, let's look at sectors which normally we don't track and which are showing strong price traction. Remember, the broader markets are just absolutely flat to weak. So the auto ancillary pack and especially the EV space of buses. So Electra Green, again fresh record high, 5.9% higher, 2117. You have JBM Auto. Remember, these are all bus makers on the EV space where a lot of government led moves are expected in terms of replacing bus fleets. So JBM Auto is 2190, about 8.5% higher. And Sakshi, a lot of auto ancillary stocks are moving very sharply. Let me just give out some names. Let's look at Automobile Corporation of Goa Limited. It is called ACGL. This is a Tata Group company which many people don't know of, and they make buses. As the name suggests, it's based out of Goa. 1755, maybe we should visit this company once in a while, 3% higher. Let's get Mr. Prabhakar's view on these bus makers, as also Force Motors, now about 4,150 for you, again in the green. Sadly, these numbers and the price tickets are very high, but what can be done, bhav bhagwan hai. Mr. Prabhakar, any view on bus makers, especially on the EV side?
No, there are a lot of orders which are coming. No, I personally do not track, so that I cannot comment on few stocks. But overall, if you see the number of EV buses order which each state government is giving, it is very good. Yesterday also Tamil Nadu government gave an order to one of the makers. So it is continuous flow which is coming. Even exports are very good. So I think bus makers, instead of EV, if you take it as a total bus makers, what Tata Motor, Ashok Leyland are getting, it is very good. The numbers are also showing that. So I'm very positive on passenger vehicle and commercial vehicle. Even higher CC motorcycle. They have shown a lot of pickup in the last year, and this January numbers were also very good.
Okay, let's take a break right now on this note. Mr. Prabhakar and Amma will be with us. We will discuss more stocks on the other side, viewers. So stay with us. We'll be just back.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-risking the Future in collaboration with Business Today.
Welcome back. It's about 9:40 for us. The markets are absolutely flat if you look at indices such as the Nifty doing nothing at about 21,800. The Nifty Bank is down about 55 points, doing nothing at all at about 45,584. It's the IT index which is up about 450 points, about 1.2% higher, which is doing the best in terms of large cap indices showing strong traction. The index itself sort of moving up after a 3-day correction. So the IT index doing fairly well. Let's look at stocks within the IT space which are outperforming. We track 16 for you in the F&O space. Wipro is up 2.5%. The counters showing pretty good strength in terms of both price and volume. Let's look at how the open interest in Wipro has moved. It's 2% higher. HCL Tech, the open interest is 2.6% higher. L&T Technology Services, the open interest is 4.7% higher. Needless to say, all these stocks are in the green, and a bit of short covering happening on Emphasis. 0.4% lower is the open interest, and 1.4% higher is how the markets are treating Emphasis. To you, Mr. Prabhakar, when you look at how the IT pack has performed, we are almost at a record high level on the Nasdaq globally. What attracts you within the mid cap and the large cap IT on the domestic side?
Yeah, Newgen is where we have a buy, and Sonata Software in the mid cap, and in large cap we like Infosys and Wipro due to valuation comfort.
Okay. Any long-term target on Wipro that you have, sir?
No, I think Wipro, no, from the current level, it is hardly 9% is the upside we have on Wipro.
Okay. Amarji, any view that you would want to put out across the mid cap and the large cap IT space, sir?
Yeah, I would say that large cap, amongst the large cap, TCS continues to remain very strong on the charts, and also this is one stock which has really taken out key zone of resistance, and it's if we go back and see, so it has reached major levels and it's trading at record highs. So that really tells me that TCS is one stock to look at from a long-term perspective, and on any correction, this is one stock one should definitely look at having.
Okay. Mr. Prabhakar, many thanks for being with us on the edition and sharing with us all your stock ideas, and we'll continue to mark out all the stocks and track all of them till we meet next time as well. Hope you have a great day ahead and the week to follow too. Let's continue our discussion with Amar, who is still with us. The other pack that is showing some kinds of a tick on the upside, even though the benchmarks are doing absolutely flat trade today, is the metal pack. Amar, and I wanted to discuss a few stocks here, and how do you really see the metal space today? So from the F&O space, I can see Nalco, that's now about 4% higher in trade. It's among the top movers. Of course, some kind of ticks coming in on stocks like NMDC as well. And even in the, on the Nifty as well, we do have a few stocks that are moving up. Tata Steel, for example, JSW Steel. These are the stocks that are showing some bit of a move on the upside. How do you look at the metal pack as a whole, and any particular stock that looks attractive at the current levels?
Yeah, so looking at the metal pack, if I look at starting with the sale, so we are seeing, we witnessed a significant rally. Now we are witnessing some sort of correction, but overall the trend remains positive. If I look at Tata Steel, again we are seeing a similar pattern. It seems that higher levels are definitely being looked at booking profits. So the stock has got resistance around the 145, 150 zone for Tata Steel. Downside support is around 130 levels. And if I look at GSW Steel, I would say here the charts are not at all very, I would say, very clear, and also it's more or less consolidation. So this is one stock one can definitely avoid from a short-term perspective. Looking at NMDC, NMDC is one stock which is very different as compared to Tata Steel, SAIL, or NMDC. Very strong on the long-term charts. And also, if I go back in time, the stock has a potential, because the stock, if we go back almost a decade or more, the stock used to trade around 400 levels. Currently, it's around 242. So the stock still has steam left. But at the current levels, on any correction, this is one stock one can definitely look at, because the stock has more upside to it, and the long-term charts are very strong as far as this stock is concerned.
Okay. Shail was mentioning the Tata Group stocks. There is one stock from the space that I wanted to mention, and that is TRF. Remember even in last week, there were two upper circuits consecutively that we saw on the stock. This was after the news came in that the board has said that they're not going to proceed with the amalgamation with Tata Steel. That led to a sharp uptick. It's again moving today, about 8% higher in trade, which actually means it's about 40% up in the last 3 odd trading sessions for the stock already. On TRF, would you have a view, Amar?
See, if you ask me, TRF is one stock one can definitely keep a watch on from a long-term perspective, because the stock, despite a rally, the stock has a long way to go. And if we go back in time in December, I would say in 2015, the stock used to had made a high around 490, 500 levels. So, and if I go back further in time, the stock at a point of time used to trade around 1200 levels. So the stock has potential taking out the 500 level. If it sustains over that level, then it could really rally further significantly. What we interesting thing is we are seeing is that volumes have been significantly higher during these breakouts. So that tells me that there's something more that's happening in this particular company and this particular stock. So yeah, on any correction, because if you look at on a monthly chart, the stock is up almost 80%. That is phenomenal returns. So the question is that do you buy now or do you wait for a correction? Whether there will be a correction, that again is something that needs to be watched out for. But 500 is a level to watch out. Those who are long, they should look at 490, 500 as an exit point if the stock doesn't reach that level. If the stock takes out that level, sustains out that level, then the stock is definitely headed higher towards 859 levels.
Okay. Sakshi, I think what needs to be marked are two sets of stocks. Zomato, eye-catching move. We have 155.50 on the charts, and this is accompanied by a surge in volume. When you look at it's the third day of gains, and this is accompanied by a volume of somewhere like about 3.4 crore shares already traded. So that would put it in the vicinity of somewhere like 3.4 into 155, somewhere like 300 crores in terms of volume alone. So this is something to be looked at. What's breaking down, Sakshi, are stocks like Mazgaon Dock. Remember, the earnings are due today, and traders are very cautious. In fact, investors are very cautious. 1.9% lower at 2076. Bharat Dynamics is 2.9% lower, 1786. Cochin Shipyard is 3% lower at about 857. So this is a sector which is bleeding. Midhani, as you pointed out, 9% lower at 416. These were super high beta stocks which are correcting either ahead of earnings or post earnings. So these need to be noted. And Sakshi, what's really moving up after a decent correction is stocks like SW Solar. So that's the EV theme that's coming in. Let me just look at the stock price. 588 when it comes to the pricing, and it's called Sterling Wilson actually. That's why it's taking a bit of a time for me to get the price code. Okay, again days low, as also Borosil Renewables. This is also at about 515, 516. So all those stocks that had moved up very rapidly are now undergoing a very strong bout of profit booking. Look at SGVN, it is now at 121.50, and if we see the daily chart, it's now down for a third day in a row, and NHPC at about 89.25 has corrected equally sharply. This is down for the fifth day in a row. So these are the stocks where very strong bout of profit booking is happening, Sakshi.
Absolutely. The Nifty is now down 0.2% at 21,787. Most of the sectors now look in the negative territory, barring the IT and the healthcare pack. It's the PSU banks that are bearing the brunt now, 1.8% down. A sharp bout of profit booking really took place. What's also trending lower is the broader market. So the small cap 100 index is now 1.5% down in trade. Remember, the broader markets also towards the last part of previous week also were looking at profits being taken off the table. So again, that space is under pressure. Oil and gas, realty, mid caps, also the other pockets that are trending down now. It's also the Nifty bank, private banks now also in the red. Flattish trade on auto stocks as of now. So the market breadth looks to be on the negative side now, tilting towards that, but it's the healthcare pack that's supporting the markets from stemming lower. So you have Divis Laboratories, that's 4% higher in trade, a clear stock that's been moving up as well right now. We did talk about the PSU banks as well, but Amar, would you have a view on the private sector banks, the big heavyweights? Do you think the tide is going to tilt in favor for these ICICI Bank, HDFC Bank, Axis and Kotak Mahindra Bank? Is the time right to at least start nibbling into these stocks if somebody has not yet?
First, talking about HDFC Bank, I have been speaking for, I would say, many months on that this stock isn't going anywhere. Because if you look at the long-term charts, clearly tells me that it's not going anywhere. Yeah, it's approaching crucial support zone. So anywhere between 1350, 1400 level, 1400 level, that's a very strong support zone for HDFC Bank. And so those who are looking at an opportunity of entering, they would look at a buying opportunity, but they need to buy and hold. So it's more of a consolidation for HDFC Bank is concerned. Looking at ICICI Bank, again, a similar story. ICICI Bank did manage to rally. It is trading around 1,000 levels, but it seems to be capped. So till the time we don't see ICICI Bank sustaining over the 1,050, 1,060 zone, I would say it's completely capped because the long-term charts point towards, I would say, consolidation, and intermediate-term trend, short-term, they also point towards the same. Now, looking at Kotak Mahindra Bank, Kotak Mahindra Bank also has the same story. So if you look at and just contrasted with the PSU banks, it's a completely different story there altogether. So that's the reason we've seen Kotak Mahindra Bank also not perform over the last, and the market has rallied, market hitting new highs, but these banks and have not really performed. And that is visible clearly on the long-term charts. And again, it's more of a range play for all these stocks, be it Kotak Mahindra Bank, be it HDFC Bank, or be it ICICI Bank. It's a very good range play. Those who want to trade in the range, buy around support, sell around resistance, for them it's a good trade to have. But don't expect any significant rally in the stock in these stocks happening in a hurry.
Okay, Sakshi, let's look at the Nifty now. We are 40 points down, 21,743 for you on the charts. As far as the intraday move is concerned, the index is at a pivot, and this is something that should provide an, how should I say, an intermediate kind of a bounce from this level. Should it break down, then the first support level is fairly low, 21,670. What are the stocks that are causing this pain as far as the index is concerned? Reliance is down 1%. It's causing a 25-point cut on the Nifty. SBI is undergoing a bout of profit booking, no problems there. 1.2% lower, 716, 8 points down in the low. Coal India, this is the earnings boy today, 3% lower, Sakshi. Remember, the counter was at a record high, it had run up very sharply, 441. So the savvier investors, the savvier traders are actually selling ahead of earnings. 8-point contribution to the downtick. And ITC 412, 1% lower, ICICI Bank 0.5% lower, contributing a downtick of 8 points each. Amarji, before we let you go, ITC somehow has turned into a disappointing stock. People were gung-ho, like beyond crazy, beyond 500 when it had hit an all-time high, and from then on it's sort of collapsed. Now news coming in that parent BAT might actually be wanting to exit. What are the good levels for ITC to be purchased?
Yeah, I would say that if you look at ITC had a dream rally, and those who got long around 200 levels, they made triple-digit returns. Now we are witnessing some sort of consolidation. So it's like always we need to remember that trees don't grow to the sky. So there's always some sort of market dynamics and market structure that keeps on changing for stocks and companies. So that's what we are witnessing in ITC. Yeah. Asking about levels, if you ask me, somewhere around 380, 400, it's around 411 odd levels right now. So 380, 400 is a level where the stock would find some support. We could witness some pullback. But again, on the long-term charts, the trend has changed. So it's now, I would not say exactly like HDFC Bank or ICICI Bank or Kotak Mahindra Bank on the long-term charts, but the long-term trend is not there. The momentum is not there. So the stock could go in for consolidation. So it could be 380, 370 on the downside, 450 on the upside. So it's more of a range, again, play for ITC. Do not expect the stock to really rally from a short-term perspective.
Okay. 955 for us. Profit booking across the board, Sakshi. IRFC at about 141 is now down about 7.5% higher. 460 crores worth of transaction happening. RVNL 243.25, 6% lower, about 200 crores worth of transactions happening. Remember, the 5-day average on RVNL is about 400 crores. So in the first 30-40 minutes of trade, we've already seen 50% of 5-day average. IRCON 211.80, 4.7% lower, 119 crores worth of transactions happening. Pain on Bandhan Bank 206, 4.6% lower. The volume is fairly substantial, 357 crores. It's already overtaken the 5-day average of 257 crores, and this seems to be a very, very strong breakdown, Sakshi. This price was last seen somewhere in March of 2023, so almost an 11-month low. Really, really bad on the stock. 205. Let's look at how the open interest has moved on Bandhan Bank. Well, it's 9.2% higher with a 5.3% drop in price, accompanied by a very sharp rise in volume. Amar, what is the stock telling you, Bandhan Bank?
The stock has been in a secular bear market. The market has been in a secular bull market, and this stock has been in a secular bear market. And those who went long, they've really, I would say, lost money. And also, what we are seeing is that the stock did rally towards 250, 260 levels. Currently, it's again down to 200 odd levels. So if we go back and see, so in last year it had made a low of 182, and if I go back further, so it had made a low of 152 in 2020. So the stock would find some support around the 180 odd levels initially to start with, but I wouldn't recommend getting into stocks which are in a secular downtrend till the time we see a trend change, or till the time we see some positive commentary from the company, or in terms of results, or in terms of the management speak.
Okay, well, on that note, Amar, thanks a lot for being with us on this special edition and sharing with us all those stock ideas and strategies for all our viewers. The markets are trending lower, about a 0.3% downtick on the Nifty now, 21,726. Nifty Bank, half odd percent lower in trade. So that's where the pain is emerging. It's the financials and it's also the PSU banks, particularly, that are looking at sharp bout of profit booking at this point in time. Sectorally, like I pointed out, all the sectors have trended lower now, barring moves coming in on the healthcare and the IT pack. So it's stocks like Wipro, it's stocks like HCL Tech, Infosys, Tech Mahindra, LTI, Mindtree that are holding up in this kind of a weaker market, along with pharma names like Divis Laboratories, Apollo Hospitals, Dr. Reddy's, and also Sun Pharma at this point in time. Zydus Life Sciences, 5.5% higher in this kind of a market in the F&O space as well. So these are the pockets that are still moving up at this point in time. Time to wind up this session, and we will continue to focus on a whole host of news as well. But let's also shift focus on the primary market space. APJ Surendra Park Hotels stock may be looking at listing in just about 55 seconds from now. The pre-opening trades indicated a settling of 187 rupees on the stock, which is a 20% premium to the issue price of 155. Let's see how that opening really happens. Remember, it's a 920 odd crore rupees IPO that closed on February 7, and we had 600 crores worth of fresh issue and offer for sale of 320 odd crore rupees. The price band was 147 to 155. The issue price was later decided as the upper band of 155 rupees. And we're now looking at the listing to happen. 22 seconds for remaining on the stock, and the grey market premium also was indicating around a 20-25% of an upside that could be looked at in terms of the premium, and 187 is already indicated in the pre-opening level as of now as well. So those are the visuals that are coming on your screens.
Congratulations. Congratulations. Heartiest congratulations to APJ Surendra Park Hotels
Okay,
Limited.
181 is the price then coming in on your screens for the stock.
It is now officially listed on NSE. Ladies and gentlemen, a moment to be cherished, treasured. Let's celebrate this moment with a huge round of applause. APJ Surendra Park Hotels Limited is now officially listed on NSE. It marks a milestone.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Celebrate 32 years of leadership in business news with Business Today, from the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20. We redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation, and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Good morning, ladies and gentlemen. This is with our extended coverage of third quarter earnings as far as stock markets are concerned. And with us is a special guest. We are joined by Mr. Ajay Patil. He's the Vice President